It is clearly evident now that Canadian housing market has turned upside down. Let's explore in this video latest news about Canada's real estate. Has the time come to look for a bargain deal? A small talk about overinflated houses alongside investor frenzy we all witnessed, and at the end, my perspective about it. Hi, my name is Sunny, and I make content that affect a common man financially. So let's dive into today's topic: Canada's houses going down. If you're new to this channel, please subscribe to it alongside smashing that like button, as that will help me with the YouTube algorithm, which of course will be highly appreciated. Real estate prices alongside home sales are dropping very rapidly, whereas some developers are even thinking about putting their projects on hold. The myth about house prices in Canada going up this summer too is finally busted when mortgage rates increased. Finally, the central bank has started to think rationally to tame record high inflation, which, according to many experts, was fueled by excessive stimulus government injected into the economy during the last 2 years when we faced once in a century pandemic. No doubt, asset prices worldwide has expanded much beyond a reasonable limit, but here in Canada, prices of an average home has reached much beyond the bubble territory where flipping speculative buying has become a common sight. House prices have already dropped by double digits in some suburban areas of big cities in Canada. Maybe now is the time for them to go down even in city centers. According to a senior economist, frothy psychology in Canada's housing market has been broken by higher interest rates. The thinking that real estate prices will always go up in value is shattered now, as a downward trend has already begun when Bank of Canada has just started raising their benchmark rate to tame inflation. A typical 5-year fixed rate has jumped from 1.8% to over 5%, which now has pressed a sort of panic button, thereby increasing distressed sales from over leveraged owners. Normally, it takes 18 to 24 months for a complete impact of interest rates to be felt. Hence, wait and watch could be a smart idea than buying now. Even though real estate prices have gone up in the US by over 60% in the last couple of years, but here in Canada they have shot up 300%, thereby making home ownership unaffordable. It is clearly evident from data that housing is consuming more than 36% of all new capital investments, which is a huge comparative to other developed economies. This unbalanced growth in one sector of the economy are bound to have short term as well as long term impacts, especially when interest rates have just started to go up. That is exactly the reason why household debt has reached over 180% of disposable income for Canadians. Typically, houses are meant to be bought and lived in, where owners usually grow their families, whereas on long term basis they are considered as an appreciating asset. But lately, ultra low interest rates have encouraged group of investors to buy real estate with a sole motive of making a quick buck in a short period of time. Don't get me wrong, even common people have been borrowing against their principal home and using this borrowed capital to buy their second or even third rental properties. Remember, simply by borrowing against your asset and using it as equity in your next purchase does not increase your net worth. All it does is increase your leverage as well as debt. And to make matters worse, government of the day did nothing to stop this mad rush of speculation, and now collectively we all have to pay in different ways and forms. I like investing in an appreciating asset where real estate is definitely at heart of it, but there is a huge difference between investing and speculation. In the last couple of years, what we all have witnessed in real estate was not investing at all, as nobody was interested in long term sustained growth. Everyone, including bankers, mortgage brokers, real estate agents, developers, investors like you and me, none of us were interested in asset building. Rather, the focus was to buy something before summer with a simple idea to flip and hopefully make a quick buck. Another school of thought is record immigration along with new international students coming to the country. there will be huge demand for housing, which to a certain extent is true. But keep in mind, whether you are new or old in this country, unaffordable housing has become a big issue. There comes a time when buying a simple house for millions of dollars does not make any sense money wise. Hence, market forces were bound to correct this imbalance, which came in the form of inflation and increasing interest rates to counter it. I hope it makes sense as I'm just a random guy on YouTube having an opinion and not even a financial advisor. So please consult one before investing. If you have found value in the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.